You just heard from Tom Lee there, again, calling for a big rally in small caps. He's been saying that from the beginning of the year, just to be fair. Do you agree with him that there's as much as 40% upside, especially as we're hearing from what seems to be an increasingly dovish Jay Powell?
Well, yeah, when you look at what's happened in the S&P 500, there's only two sectors that, there's 11 sectors in total. Only two have beaten the market this year, and it's all tech, tech and comm services. It's been a very narrow leadership. The small caps are only up a few percent when large caps are up almost 20%. I agree with him fully on the valuation case. They are much cheaper than the market. The S&P is at 22 times. You've got 10 points lower on a lot of these small cap indexes. It's just been that the small caps are the only one paying the higher rates from the Fed. And so what caused the turn was the very dovish CPI. We think they should be lowering rates. And once they do really start doing that, I do think it's a green light for small caps.
All right, so Jeremy, you're highlighting the valuation discount. That's something a lot of people have done when it comes to small caps. Is valuation a big issue in this market right now? We continue to see the market hit, fresh highs, whether it's the Dow, the S&P, and the NASDAQ in recent weeks. At the same time, the highest valuation names are powering the market. Is valuation something we should be concerned about, especially with such an optimistic estimates for earnings season coming up?
No, I do say that the broad S&P as a whole has been driven in large part by earnings. I mean, half of the gain this year has been not just from multiples getting bigger. It's actually been driven, half of it's been driven by real earnings growth. And the premium PE for those tech stocks, yes, they're at 30 plus times earnings, but their growth estimates are almost twice as high as the non-tech S&P companies. So you wouldn't call them like a bubble or really dramatically overvalued. It's that their earnings are expected to be that much stronger. So, the key issue is if their earnings do not deliver, there's obviously more risk being higher multiple. But for now, the earnings have been delivering. And so, we'll be watching that earnings season very closely and the sort of farther out outlook to see if their earnings can maintain. But you're absolutely right. They are being warranted higher prices, but higher earnings growth.
All right, I got to give you credit, Jeremy. From the beginning of the year, you've been really bullish on global markets, and you're still bullish on India right now. So you have your own product. You talk in your own book a bit. The WisdomTree India Earnings ETF, ticker EPI, up 21% year to date. Why are you bullish on this now? With so much upside momentum in the U.S., why do you want to go outside the U.S. for opportunity right now?
Well, we talked about the pivot away from China. The other big news story this week is you have China's third plenum this week. And people are talking about, are we going to get this big stimulus out of China? They've been one of the sort of other leaders of the global growth for the last decade. We see that as a story that's shifting, and we see people rotating from China towards India, towards Japan. We think India is one of the best long-term growth stories for the global economy over the coming decade. So it's not just a this-year event; it's really a long-term story. But they already went through their election season. Modi has stayed in power. A lot of the people, the reforms he's done over the last few years are still in place. He's going to further take even more efforts. It's a reasonable multiple with very strong earnings growth. So everything's lining up for a long-term story of India, for Japan. The pivot to Asia away from China, we think, is well on its way.